ladies and gentlemen, and welcome to Morning Markets here on the True Potential YouTube channel. Before we get going today, I'd just like to recommend tomorrow's Do More With Your Money show. This will be a bank holiday special, so please do join us on the True Potential YouTube channel tomorrow for that. Today on Morning Markets, I'm joined by Kevin Kidney, Investment Director. And Kevin, what is it you and the investment management team have been looking at in the last 24 hours?
Well, we might be stealing some of the thunder from the podcast that's coming. However, the focus this week is the impact of energy prices on the inflation outlook and the divergence we think we're about to see between the US and Europe. Very broadly, inflation expectations in the US have fallen substantially through the year. The impact of gas prices is less than the US. The impact of the oil price fall is more. So the expectations are for a substantial fall in inflation in the US next year, which aligns with what the US Federal Reserve thinks. And it may take some pressure off the US Federal Reserve to hike interest rates next year.
Yeah, so does this come back to, the US having its own production, its own resources there, and
that's
Europe being very dependent on the Russian situation?
In a nutshell, the US is energy independent. Yeah. So effectively, oil, shale gas, it produces enough for it to service its own domestic needs. It can even export a little, whereas the huge ramifications from Europe effectively embargoing the Russian gas creates an acute problem for the continent of Europe in particular, because it has to now import that deficit from countries such as the sovereign states in the Middle East, Canada, the US and the UK.
And it's that supply and demand and the prices.
Yep, so the UK actually was almost energy self-sufficient in gas, but because we don't store it on shore, and because we have a market in gas, Europe can import our gas. So the sterling-based, pound-based gas prices are rising as much as euro-based gas prices.
So what is it that can be done to help with this situation? Will it be more interest rate rises on the way?
Well, yeah, I'm not too sure that's going to help ease the cost of living pressure, but I think we spoke about how expectations for inflation in the US have fallen substantially. They're at record highs now in the UK and Europe because of the expectation of gas prices on future inflation. So it is almost guaranteed we are going to get further interest rate rises from the Bank of England and from the European Central Bank. And I think one of the challenges is we saw a 50 basis point increase from the bank earlier this month. That's likely to be the norm now. So we can probably expect the next two meetings to have similar sized increases in the UK. And we're also likely to see similar from the European Central Bank again in September. The challenge for the European Central Bank in particular is that interest rates there are actually still at zero.
Yeah.
So they have much further to go before they can actually say that they're tightening monetary policy.
Yeah, so there's a lot of adapting to do in terms of that. What does this mean for investors and markets and the True Potential portfolios?
Well, I think this is the real benefit of the value proposition here at True Potential, which is being multi-manager, multi-asset and multi-region. So any UK investor who invested exclusively in UK assets and perhaps was dominated in the pound and also perhaps in the bond market was likely seen a fall in their value, a substantial fall in the value of their portfolio this year. But being diversified brings the benefits of being exposed to US assets, for example, but also the translation effect of not being invested 100% in the pound or in sterling. So you get that translation effect of a weaker pound domestically contributes to a higher value of assets when you transfer that back into a pound value. But of course, some of the investments we have in the portfolios right now favour the FTSE 100. So although the outlook in the UK is a bit gloomy, a stock market such as the UK, which benefits from rising energy prices and also rising interest rates because of the dominance of miners, materials and financials in the index, benefits portfolios, and that's why
we have seen some better performance in the UK, haven't we?
Well, that's why we've seen the UK stock market is actually up this year and has outperformed the US, has outperformed global equities, has outperformed China, has outperformed emerging markets. So it's that benefit of being invested in assets which have an inflation pass-through protection, which has been so good.
There are positives there. Well, that's a good morning market today, Kevin. Thank you very much. Very informative.
Welcome.
And for our viewers, please do join us tomorrow on the True Potential YouTube channel. Do More With Your Money show special for the bank holiday. And we'll also be back with more morning markets tomorrow. Thank you for watching. Goodbye.
If you're interested in taking your investing to the next level or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.